So good afternoon, everyone, and thank you very much for joining today's quarterly tax dialogue series organized by the UK Ghana Chamber of Commerce with the PwC tax team. So this afternoon, we have a panel of distinguished tax professionals that would be helping us do this or have this conversation. But before that, I would like to introduce our chairman for today's occasion in the person of Theophilus Tewia, who is a lawyer and the managing partner of WTS Noblefields Ghana. In addition, he's also the non-executive director and legal sector chairman of the UKGCC. So Theophilus, I hope you would accept this invitation to be the chairman and to chair this occasion. Thank you very much. So over to you, Theo.
All right, thank you, Abeku, and thank you, everyone. I bring you greetings from the board of directors of the UK Chamber of Commerce, and today's an interesting day, and we're going to have a discussion on the Tax Exemption Bill. There are calls from academics, practitioners, as well as politicians that we need to have a tax exemption bill. And as to whether it's a good call or not, that is why we're on the call today. We hope at the end of this discussion today, we'll have views from the participants and the members who have registered for this call to have your views so that we can submit a common view to the Finance Committee of Parliament. Yes, so we want to get the views of the panel members as well as those who are registered to be on the call so that we can have a concerted effort to put pressure on Parliament. We also anticipate that the discussion will be dispassionate, backed by research, backed by insight from technical persons. We have very resourceful persons on the call. We hope at the end of the day, we're able to get something meaningful to send out our submissions to the ministry in that respect. So I urge everyone to give in their best. So thank you very much for having me.
All right. So thank you very much, Chairman. And let me use the opportunity to introduce the panel members for today. So I will be your moderator for today, and my name is Abeku Jankwansa, and I'm a tax partner at PwC. And joining me on the panel are the following persons. First is Mr. Kofi Frimpong Korea. Mr. Kofi Frimpong Korea is a partner and the head of tax at KPMG. He also leads the energy and natural resources line of business at KPMG. One interesting thing about my panelists for today is that they are all members or fellows of the Chartered Institute of Taxation. But the interesting thing is that they all have, in addition to that common ground of being members of the Chartered Institute of Taxation, they are all from different fields. So Mr. Correa has a very distinguished background in audits, and he is now a tax partner. So as far as financial accounting matters are concerned, I'm sure he would bring such perspectives to bear as we discuss the Exemptions Bill 2021. The second person on the panel for today is Mr. Isaac Patrick Quay. Remember, I said that, interestingly, they are all, including the chairman, members or fellows of the Chartered Institute of Taxation, but they come with added qualifications and experience. So Mr. Quay, in addition to being the associate or being an associate director, at EY Ghana, he is also a member of the Ghana Bar Association. So he's a tax professional and a lawyer. So whilst Kofi helps us from the tax, accounting, audit perspectives, Mr. Quay would also be helping us from tax and also bring a legal twist to our conversation. The third person who will be joining me on this panel is Mr. Daniel Nier. Mr. Daniel is the head of the tax policy unit at the Ministry of Finance. Once again, he's also a fellow at the Chartered Institute of Taxation, Ghana, and he has been with the GRA and now at the Ministry of Finance for several years. So whilst Mr. Corrier, as I said, is a distinguished auditor, tax partner, Isaac brings in his legal knowledge in addition to tax. Mr. Dan Nier holds an MPhil in taxation, so he also understands policy issues very well. So this would be the personalities that would be joining me on today's panel. Now, when the chairman was introducing himself and accepting to be a chairman, he made mention of certain things. One, do we really need a tax exemptions bill? Is it because there are so many calls for us to have an exemptions bill? We all need to get on the bandwagon, as somebody would describe, and everyone say, let's get a tax exemptions bill. Some have actually raised the question that under the constitution of this country, it is only Parliament that can impose taxes. And after Parliament has done that, any exception to that would usually have to come through by a resolution of Parliament. So if we have laws saying this, then why are we at this stage? Is it a stage that Parliament did not do the work that it ought to have done? That is why we are here. Or is it a case that Parliament actually thinks that exemptions are good and we need it? So for example, last year, when we had issues with COVID, what happened was that there were some tax exemptions given to those in the health sector, for example. So this goes to confirm how important exemptions are. So why the calls for us now to have a tax exemptions bill to regulate or to take away some exemptions that exist? Is it an issue of procedure? Is it an issue of people doing things when they did not have the powers to do it? And to the extent that we decide to introduce an exemptions bill to make granting of exemptions very difficult, are we sure that our people can actually pay economic prices for the things that they ought to pay when there are no exemptions? In all of this, as we are very much aware, one of government flagship programs is the 1D, 1F. The 1D, 1F also comes up with some exemptions. What will be the impact of the tax exemptions bill, for example, on the 1D, 1F? And I'm very confident that my panel members today would actually interrogate all these issues so that we can leave today asking ourselves, do we really want to continue with this? How are we going to fine tune it? And how are we going to make sure that at the end of the day, this country gets what it sets out to do? Before I hand over to my panel members and ask them a couple of questions so that we can start the discussion, I would want to put the whole conversation around the tax exemptions bill within the context of the national budgets that we draw up every year. So as you may be aware, in about 2 weeks' time, we're expecting the president's budget to be presented, hopefully by the finance minister. And just to step back, on the 12th of March this year, the finance minister actually went to those you and I elected to tell them that we expect to run a budget deficit of about 9.5%. And the amount of deficit that was going to give us that 9.5% was a deficit of 41.3 billion. He then went on, sorry, just a second. He then went on to talk about the fact that in order to arrive at a deficit of 41.3 billion, he expects that we're going to raise revenues and grants of about 72 billion, and we're going to spend about 114 billion. But in order to raise the 72 billion, he expects tax alone to give us about 56 billion. So whenever we talk about the tax exemptions bill, proponents for this bill may be saying that that 56 is not good enough. And those are the reasons why we probably need an exemptions bill to increase the amount of revenue and thereby close it. So just before I hand over to my panel members, so that we can start this conversation, and today, as I said, we have the head of the tax policy unit with us, and I'm going to give him some 15 to 20 minutes to do a presentation on the perspective of the Ministry of Finance as far as this bill is concerned. And of course, the ministry is the one championing it. And if there are certain insights we need to gain, he would do that for us. But just before that, I would want to introduce or call in Mr. Kofi Korea to give us just about 2 minutes take on what he thinks about the tax exemptions bill. And after that, I would also go to Isaac for just about 2 minutes take on his view on the exemptions bill. Preliminary comments, I know we're going to have a lot more detailed conversation on what he thinks. Should we go ahead? What are his preliminary views? So Kofi, over to you. Thank you.
Thank you, Abeku, and thank you, my fellow panelists, for the opportunity to share my thoughts on the bill. And as rightly enumerated, I mean, if you want my view on the bill, I believe it is more of procedural in terms of getting all what we've been doing already together in a form of legislation. Otherwise, there have been several instances, and I rightly said, our constitution permits the parliament to approve or recommend fiscal policies. And parliament is the right body to ensure that such exemptions and other things are done. But do we even need it? If you ask me for my view, I will say no. We do not need exemptions at this time or at this stage of our career. And why do I say so? I say so, and as you alluded to, we almost always run a budget deficit. And then the various laws that we have, and for which the exemption bill even seems to protect, as per the transitional provisions per the exemptions bill, at 896, at 870, which are the two key laws for direct and indirect taxes, provide certain tax holidays, tax reliefs, tax concessions, a number of location incentives for businesses already. All these things are enshrined in these laws that we have. And like I said, this new exemptions bill even seeks to protect these things per the transitional provisions. So why then do we now even go through this process again? Then of course, if you look at what other countries and even are happening, the developed countries who earn substantive or substantial tax revenues because they have the technology, they have the means. Recently, if you look at the COP26, the major issue from OECD has been adopted by these people, where they are seeking to do a minimum of 15% taxes for multinational companies that are operating within their jurisdictions. These are the ones who are able to even rope in a number of people to pay taxes. While a country like Ghana, which we are struggling to even expand our tax net, consider granting exemptions to businesses where we are short of even our tax revenues. So yes, I will join maybe the other parties to show that how do we know? I believe that we should let all these companies and things go by some of these policies that are being legislated, so that we also go by it and not worry our heads so much about the exemptions bill, where of course, what we need to do probably is to look at how we can get more people into the tax net to shore up our tax revenues, increase tax revenue to GDP ratios, and not rather to focus on how we can grant more exemptions to businesses or to individuals. So I believe, or I share the view of others. Yes, it's good to organize it as it is now, because various people come to do various aspects and various taxes that go. It's good to have the documentation, but in terms of whether indeed that is the way to go, I beg to differ. Thank you very much.
All right, so Kofi, thank you so much for your preliminary comments. So I heard issues about procedural. I heard issues about the stage at which we are at as far as our development trajectory, if I put it that way, is concerned. So we'll come back to you for a lot more conversation as we go on. In the meantime, for those who are joining us, thank you so much for joining us. You can post your questions. We're going to focus a lot more on asking questions. And since we have the ministry's rep here, I'm sure he would address it. And one of the reasons why we are even meeting today is to even help shape the bill in its current form. And as the president would always encourage, we ought to be participatory in some of these things rather than just sit on the fence and complain later. So Isaac, let me come to you and get your preliminary comments. And I'll be glad if you can even give a legal twist to this whole conversation that we're going to have today. Thank you very much.
Thank you, Abegu. And good afternoon to everybody. Basically, I want to look at it from the memorandum to see, is there a ill that this bill attempts to cure, given the rationale? And so we told that the object of the bill is to rationalize the current exemptions regime by either varying or limiting the scope where necessary and consolidating existing statutory provisions on exemptions to set clear eligibility criteria, to provide the administration of exemptions, and to provide for monitoring, enforcement, and evaluation of exemptions. That in itself will tell you that the subject of exemption is not in dispute. We have it varied and scattered. However, we recognize the fact that over the period, many institutions have clothed themselves with powers to either initiate the process of acquiring or procuring exemptions. And in many ways, the finance ministry is unable to get a good database on the tax expenditure. So for me, this bill is long overdue in that the previous one, Exemptions Bill 2019, did not see the light of day. And so now we're talking about Exemptions Bill 2021. It is important to recognize that within the milieu we find ourselves in terms of developing countries and everybody trying to attract foreign direct investment, there will definitely be some takeaways. However, to what extent are we protecting ourselves from abuse? And so for me, if the objective is to limit the scope where necessary, and also variation, and the icing on the cake is that provisions are being made for monitoring, enforcement, and evaluation of exemptions. Very beautifully crafted, but the bottom line would then be whether we are able to build strong institutions to ensure that these very lofty ideas crafted in law will actually be given the breath of life. Thank you.
All right, so thank you very much, Isaac. Critical question. Will they be able to implement it well enough? So those are the questions to be addressed. So at this point, I would hand over to the head of the tax policy units, Mr. Daniel Nier, to give us a 15 to 20 minutes presentation on the purpose of this bill, why we actually need it, whether it is really necessary, and how the bill would actually help governments in improving on its revenue mobilization. So Dan, can you hear me? If yes, could you please take over and let's have your presentation. Thank you very much.
Good afternoon, everyone. And I'm happy I've been able to make it for this meeting. Initially, it was a bit dicey. You all know we are in the middle of budget preparation. And so when it gets to this time, our meetings are very fluid. I just came out of one and I actually informed them that I needed to come for this particular meeting. So I'm glad to be here. I don't think I want to talk too much. I want to share my screen and start the presentation. I hope you can see my screen now.
Yes, Dan, I can see your screen.
Okay.
Thank you.
Trying to do a slideshow and the thing is, as a Frenchman would say, that is good. Okay, so good afternoon once again. And some of the things I want to say, so I'll answer the questions that Beku raised as I go on with my presentation. Fortunately, already there. First thing I want to say is that, and my friend from Ponkwari made a very interesting that he feels that we really shouldn't be having tax exemptions at this time. But what I'll say is that basically for us, our tax expenditures are embedded in our legislation. And then there are some discretionary exemptions which are approved by Parliament. And there are various types. But one of the rationales for tax expenditures generally, and let's know that I'm talking about tax expenditures, not exemptions. I'll come to exemptions in a minute. What we want to attract foreign investment, sometimes the exemptions are to alleviate the tax burden on some members of society. There are some which encourage business startups. There are some which go into specific sectors or locations, and generally to support the government development agenda. One of the main things we've used exemptions or tax expenditures for in this country is to support education in terms of infrastructure, health in terms of infrastructure. There are vaccines, they are not necessarily, we have TB vaccines, the other medicines that we receive, for which there are some exemptions that we give in terms of expenditure. Now, over the period, there's been quite a number of challenges when it comes to the granting of incentives, or in that sense, people were granting incentives without looking at what was there in the legislation. People were granting and negotiating exemptions without the knowledge of the Minister of Finance. And this is important because the ministry comes out, or the minister comes out with a budget for the year. If the exemptions which he's not aware of, it means he doesn't factor it into his budget. So mid-year, he's expecting that he's getting some revenue from somewhere, and someone flashes an agreement in front of him. A government has signed an agreement that says that I'm not supposed to pay exemptions. I'm not supposed to pay some taxes. Meanwhile, we budgeted to use that tax for some expenditure. So then it becomes difficult. Granting of exemptions without any sunset clauses, some exemptions go on forever, even when they've outlived their usefulness. The exemptions that are granted on foreign supply of goods and services that we can source locally. I don't see why somebody should be exempted from bringing in nails. I mean, if you want to import nails, fine, but pay the duty on it. There were some abuses and transfers to third parties who were not supposed to. And basically there was quite an amount of monitoring, but it was just not enough monitoring and review that was being done. So some measures were taken. One was the Public Financial Management Act, which required the minister to submit an annual report on tax expenditures to Parliament. The Revenue Administration Act provides that any MDA which is negotiating an agreement that grants waivers of variation of taxes should get clearance from the minister. And that same Revenue Administration Act empowers the Commissioner General to ignore any exemption that is not sanctioned by law. So you can go through all the processes and say, waive your paper, I have this. Commissioner General's question will be, please, where's the legal basis for the exemption? If it's not there, he can say no. You can do, at the end of the day, you might sue the government for misrepresentation or some other such thing. But then basically the Commissioner General can refuse to do that. And then the Income Tax Act and Value Added Tax also have provisions that indicate that only exemptions relating that are granted under those laws are valid when they relate to income tax and value added tax. So those were some of the legislative things. Then administratively, one of the things was to exclude income tax and third-party payments from exemptions. So most people realize that now we don't really give any exemption when it comes to income tax through the resolutions of Parliament. And if you want an income tax exemption, if it's not in the Income Tax Act, then forget about it. The other thing too was excluding levies from regional bodies. So we pay levies to AU, ECOWAS, which are not, we collect these which are not for us, but they are for these bodies. And so the issue was that since they don't come to government, don't exempt them. The issue of reducing special permits to the barest minimum, and that's one of the things we've been able to do. We reduce special permits by over 1,000%. Reviewing contracts and agreements to align exemption clauses with current legislation, and some automation of the exemptions process so that we reduce the human interactions. One of the things, the administrative measures we are looking at is the passage of the Exemptions Act, which we are working on right now, we are discussing, enforcing provisions on exemptions embedded in the tax laws, producing clear rules on the processes for obtaining exemptions, engaging with development partners on exemptions relating to donor-funded projects, limiting project exemptions to import of machinery and equipment, undertaking additional monitoring of tax exemptions, and then this periodic review of the exemptions to clean out expired ones, review rates, and remove unbeneficial incentives, as we call them. So now, this is the way exemptions have progressed since 2010. And this is in billions of cedis. So from 0.27 billion cedis in 2010, exemptions rose as far as 3.08 billion cedis in 2017. We've gradually been able to bring it down to 1.71 in 2020. We hope to bring it down further. When we express this as a percentage of GDP, it becomes even clearer. But we are basically, there's still work that we want to do. And let's know that the table relates to import exemptions. Doesn't relate to exemptions under income tax or VAT or any other legislation. Now, so the bill, as we've put it, this is the general outline of the bill. There are perennial provisions which deal with the object and application of the act and the definition of exemptions as related to the bill. The lawyers will understand why we are defining it in terms of just the bill, because exemptions can be very wide. Provisions which provide for prohibitions, the responsibility of the minister, and the process for negotiation and approval of exemptions. Procedures for granting exemptions to the ministry, department, and agencies, privileged persons, private business, security agencies, and development partners. Prohibition of exemption of administrative fees and transnational levies. And then general miscellaneous provisions that look at the monitoring and reporting, local content, some consequential amendments, repeals, and savings. And so let's look at the object. Mr. Isaac basically has mentioned these objects already. So basically the general idea is to rationalize the current exemptions regime. Make sure that the eligibility criteria is clear, provide for the administration of the exemptions, and provide for monitoring, enforcement, and evaluation. So the object of the act, this is the main object of this act. Let's know, the question has been that, let's know that aside of these things, the only parts of the revenue laws that were touched was some aspects of the Customs Act in terms of some exemptions there. Otherwise, most of the provisions here are general and they are meant to consolidate certain things that we are doing. And what the bill also does, the act does that, it prohibits exemptions in any other legislation. So once this bill comes into force, or the act comes into force, any provision in any act which contrary to this act basically becomes invalid. There are some savings we have made. So it doesn't affect the Income Tax Act, it doesn't affect the VAT Act, and any of the revenue acts basically. But then generally the idea is that all acts that have exemptions provisions in them will need to be reviewed to bring them in line with this act. The minister has some responsibilities, and the main thing that he's required to do is to vet a request for an exemption, ensure that the exemption is consistent with economic management priorities of government, the general policy of government on exemptions. And so all those rights that others have basically is being vested in the minister. He's responsible for submitting a request for an exemption to Cabinet or Parliament or seeking executive approval for an exemption. He's responsible for issuing guidelines on the modalities for the vetting and granting of exemptions. He's responsible for seeking the approval of Parliament by receiving for a request for exemption in accordance with Article 174 of the Constitution. It's required to advise cabinet on matters related to exemptions, and is supposed to monitor and report on the use and effects of an exemption as an economic management tool and ensure compliance with this act. So the minister has a very tall order in terms of that. But then at least he has a system, and GR is also there to help. One other major thing that has been done is the issue of commercial government projects. There's a very interesting tendency that people feel that they have an exemption of right. So no matter the transaction, whether the MDA is buying something from somewhere or anything that people are doing, they expect that to have an exemption. The first thing, one of the things this law does is prohibits exemptions on commercial government projects. So if you look for 1 through 3, the goods, services, or projects imported or procured by government or state and for a private supplier or contractor shall be subject to all customs duties and taxes as well as domestic taxes. In other words, if I give you a contract to purchase vehicles for me, whether you are importing them or buying it from a bonded warehouse, pay the duties. The duties are payable. There's no exemption on it. A supplier or contractor who is supplying goods, services, or projects to a state shall not be relieved of their right to charge VAT on a taxable supply. Very clear. So once it's commercial, then it means that we are not, and there's a penalty for that. So if a person signs a contract that does that, there's a penalty. The issue that is, so then what are the exemptions on? Basically, there are some grants that we receive. There are some donations that we receive. There are some loans that are on concession, which require a certain level of exemptions. In that case, the exemptions really is government's counterpart funding that most of the time has been provided. So government's contribution to that is that, okay, I'm coming to build some bridges or a road for you. The items that come in should be exempted. Government agrees, okay, I should have contributed to the road. So I take it that, and then in that case, it becomes a tax expenditure. It's not an exemption that goes into the road, but it's tax expenditure in the sense that government is contributing, that's what government is contributing to that project. And so that one is different from this commercial project where I'm paying you for doing something for me. And then you say that, give me an exemption. Another thing that's been done is that there are some general tax incentives that are there. So apart from those in the laws, there's one thing that is also being looked at, that exemptions can be granted to incentives to some particular industry or some particular program. And it's possible that this can be done. So this is expected that now the minister will also indicate by LI which sectors this are going to qualify from these things. So as we've done for the hotel industry, as we've done for agric and other things, what we are saying is that every exemption must be embedded in some law, which is actually the requirement of the Constitution. There must be some law that backs everything. So there must be something, must be a program that is designed. And then where there involves customs duty and taxes, there must be a list of the items to which the concession apply. And all these things we want to embed in law so that it is transparent and general for everybody to see. So if you are coming in, okay, these are the areas in which there are exemptions. These are the exemptions I'm allowed. There's no issue of going to negotiate with anybody for it. It is there. The other thing that has been brought up is that, look, I'm giving you an exemption, but the exemption is that, like I talked about counterpart funding a bit earlier. Government is actually giving you money to run your business. And government is not for that Christmas per se, as some people will say sometimes. But government needs something. So government says, okay, if I give you the exemptions, then it means I'm taking some part of your business. I'm taking part in your business. So give me some equity in your business. And this one will also be spelled out in the law for which sector. If you decide that, so we have currently for the mining sector, there's a carried interest, is in the law. The government has a carried interest of this. For petroleum is there. Unlike the carried interest for which government doesn't give anything for taking up the carried interest. In this particular case, we are saying that this is the amount that we've given you as exemptions. So give us a portion, some return on it as part of your business. And it will be clearly spelled out in the law. So when you are entering into that sector, you know that this is what is going to happen. Now there's what we call a special tax incentive for strategic investments. We can go a bit further and grant some additional for an equity stake. So government says, okay, I'll partner with government to do this project. Government takes this part. And so there are some incentives that are being given, but then that's government's taking it. So government is saying that, I'm not going to give free exemptions or incentives. I want a stake in it. And so that I'll get some return on the money that I'm putting in it. So that's the special tax incentives. Then there's the local content laws that are also being brought into the exemptions. As I said, there are some items which are produced in this country. They have good enough quality, high standard, and relatively, if we don't give an exemption on somebody importing them, they are competitive in terms of prices. And so the issue here is that where there's an item that's closely used and can be found in Ghana, it must be procured from the local government, and there's no exemption that will be granted. The only thing is that if it can be proven that there's no suitable substitute in Ghana, then an application can be made and for approval, and there'll be approval for those specific items with specified quantities so that you don't go outside of them. And this section also applies to skills and technical know-how. So we have the skills here, and we have competent and everything. Use the skills in the country. Don't go out and bring people in and then you give us some money and then you take it out through capital flight. Really, it doesn't help anybody. So that's where the local content issues are. The other things I've mentioned a bit is the administrative fees, charges, and transnational levies. So there are some fees that you pay which are for a service and they are not a tax. And so the issue is that once it falls within that variation, you don't get, even if there's an exemption, we won't give you exemptions on that. So pay the charge and pay the fee that you have to pay. And then we mentioned the AU levy and ECOWAS levy, as I mentioned earlier on. Unless the act that set them up sanctions some particular exemption, it means that those amounts also have to be paid. Then there's the issue of reporting. And there are 3 levels of reporting here. There's a report for the person who just enjoys the exemption to submit a report to the Commissioner General. The Commissioner General is also to submit a report to the Minister, and the Minister is also supposed to submit a report to Parliament to make sure that all these things that we are talking about, they are being reported on. The public has an eye on what is happening, in addition to all those regulatory agencies, so that the exemption granted is a bit more transparent. Everybody sees what's going on, and we can avoid some level of miscommunication and misunderstandings that come about because of these exemptions. Then there's the issue of the sunset clauses. So generally, we've put in a 5-year general clause where after the 5th year, the minister is required to review exemptions that exist at the time. So unless there's an expiry date on it already, or it's been renewed before just before the expiration date, once it hasn't been done within the 5-year period, then the minister will look at it. So you establish a schedule to do that. And as part of that, he can provide for public hearings. So just as we are discussing this bill, we'll discuss the exemption, the tax expenditure, see where it is supposed to apply to, whether it's doing what it's supposed to do. If it's not, and we have to scrap it or replace it, then we do so. The idea is to make sure that we have efficient exemptions. And somebody asked the question that, so this exemptions bill, which country can you really find it in? I'm yet to see, is this more of an innovation on our part? But what you do have is that there are quite a number of limitation of expenditure bills or sunset clauses for expenditures in some other legislation, some other countries. They have their limitations, basically this part, but they don't have some of the other things that we have in this bill. And so basically, the next steps after this is to make sure that we want to, the economic management team, We've gone to cabinet. We are still in cabinet to finalize this. We expect that before Parliament rises, we'll submit the draft to Parliament for Parliament to approve. And so basically, this is the rationale. I've given a few of the highlights of the bill. I'm sure that as soon as we finalize and it gets to Parliament, Parliament, just as they did with the 2019 one, will publish it on their website, and those who want to have a look at it before the parliamentary debate and have inputs can also do that. And so with that, I think I'll end my submission and say thank you all for giving me this time.
All right, so thank you very much, Mr. Dan May, for this break in letting us understand the whole rationale behind the Tax Exemptions Bill. I will be going back to my other panel members, Isaac and Kofi, to ask a couple of questions. But before that, Dan, let me start with you. So as you were presenting, you talked about the fact that if there is an exemption in another law, apart from the VAT Act, the law on income tax, and certain sections of the Customs Act, every other exemption would not stand. Is that the understanding?
Generally, that's the idea, to bring
Okay.
all exemptions aside. So, for example, to the list is likely what the Excise Duty Act to the list of items which is not included, since they have exemptions there, those provisions. But generally, what we are saying that outside the main tax laws, all other exemptions should be in this document. What we have done, and maybe I should have mentioned it, that as part of the consequential amendments, we have saved, what's the word for it? Exemptions related, any exemption related agreement that has been signed between the government and the person prior to this is saved. The act cannot be retracted. So we don't want to, is it retroactive or retrospective? The lawyers can help me. I always mix the two words up. And then if there's an exemption granted based on a resolution, Parliament we are not repealing it. They will continue for the term of the agreement or resolution or till they are renegotiated. So either it continues or renegotiate, that's it. So basically that's what we've done so that we don't we don't stop. But if it's in an act, this act basically repeals it. And so if you still want to keep it, it's not provided for in any others, then it means the person has to come forward for us to look at how we'll sort it out. Because there are all manner of legislation out there that have exemption provisions in them that the ministry is not even aware of. Once in a while, then somebody comes to something in front of us.
All right, so thank you very much, Dan. And the question I'm asking is connected to some of the comments that are coming through. So as you are very much aware, and as my panel members know, apart from the VAT Act and the Income Tax Act, and of course the Customs Act, there are a number of laws that are administered by the GRA and a number of laws for which we actually went out there to get investors to come and invest. For example, the Free Zones Act. So where is government's direction on the position of, say, the Free Zones Act? Because one of the questions that has come up is, will this affect free zones? And then what happens to the free zones concepts? So for example, if I'm a shareholder who was promised that if I come to Ghana, I would not pay withholding tax on my dividends. I decided to come to Ghana instead of going to Ivory Coast. And now there is an exemptions bill. Hopefully it will become law. Is government seeking that for even statutes such as Free Zones Act and for entities that were operating in Ghana before the exemptions bill became law, are all those persons going to say lose the concession that they currently have on dividend tax? What is your response to that, Dan?
Okay. What I'll say that on dividend tax, basically, once we have not amended the law, it will continue. And if you look at actually in the bill, section 14 of the current one, provides the exemption on the imports of items into the free zones as currently exists. The Income Tax Act provides for those ones. And dividend basically is an income tax, so it will follow that that line of it. And so until there's a repeal of that section of the Free Zones Act, it will continue to be there. They will still get the dividends.
All right. So thank you very much. Thank you very much, Dan. So maybe I will start with...
Maybe let me even, there's some questions on free zones. I might as well add them. So one was that whether the bill will affect the free zone. I think I've answered that. Yes. That free zones context is still maintained. The Act provides for the exemptions. Question is, has the free zone Act realized the objectives? If not, how do we convince us that the Exemption Act would benefit the target taxpayers? The Exemption Act, as I said earlier on, is more for rationalization, for monitoring and all those other things. It's not really to give us, if you see any exemptions in it, it's more of a rehash of things that exist already, which are being clarified or modified. So there's no new exemption that the bill is bringing up, apart from more of regularizing the things that we are doing.
All right, so thank you very much, Dan. And let me allow you to catch some breaths. And thank you so much for keeping to the 20 minutes that we gave you. This gives us about 34 minutes to have some good Q&A. So I'm going to start with Isaac Quay now. So as Dan was presented, he talked about the fact that the government of Ghana is seeking to take interest in businesses that it provides some incentives to. In your view, do you think government should entangle itself with managing companies and holding interests because it has given exemptions? And for how long should government even hold those interests? Would you also have a 5-year sunset period? What is your view on that, Isaac? Thanks.
Thank you, Abeku. That is security interest. The government will go without having a controlling interest. However, what is important is the ability of government to have resources that can quantify whatever tax expenditure that they will be making as a result of the exemptions. And so where proper valuation is made, then the interest of government can have its sunset clauses. Government has no business getting into hardcore management of businesses. They can only be facilitators. They can only create the conducive environment. But beyond that, getting into the nitty-gritty of management of businesses is out. I think what the bill is trying to do is where tax exemptions are granted, the corresponding benefits are not properly assessed. And so there is no indication as to when government must say that, okay, this period is sufficient enough to allow us to say we've broken even in terms of the benefits and the tax expenditure. That has been the problem. But there's going to be a real call on the human resources that are to be procured to enable government to do the proper tax modeling and economic modeling, such that Dan's unit, the tax policy unit, has a real big job to do. It must not be one of crafting very beautiful legislation without looking at the demands and respect of human resources. Because at the end of the day, if you look at the law as it is, I don't know whether they've averted their minds to the Diplomatic Immunities Act, 1962. Act 148, which is in line with the Vienna Convention on Diplomatic Relations. It is one area which I think they will need to tread a bit cautiously and not derogate the Act of Parliament and the International Convention. I cringed when I read that in respect of the diplomatic missions, they intend to look at it case by case. There's a need for clarity as to what they are entitled to under the Vienna Convention, and we should not be seen to, if we are unable to do our work in terms of monitoring, just to bastardize acts. It's extremely important. So for me, the intentions are good. What is important is how we carry it in a way that there will not be unnecessary panic within the investing community, within the international donor community, among others. Clarity of purpose is very, very important. And the sound bites should not be as if every investor is trying to rob. The abuses are two ways. Those who give the exemptions and the recipient of the exemptions, but who is watching the watchman?
All right, thank you very much, Isaac, who indeed is watching the watchman. So I'll be going to Kofi to ask a couple of questions. So when
Abel, can I intervene before you go? Because
Yes,
I think
yes,
Isaac has raised some
yes.
things.
please do. That's why we are here today. We are here to dialogue. Please do.
Yes. So I'll start with the diplomatic community. Actually, what we are rehashing here is what is already in the laws. So there's nothing really. We've looked at the Geneva Convention. As we mentioned, we are not doing anything that is going against international conventions. And the issue of reciprocity has always even been there. If they give us a VAT, we give them VAT. It's something that existed even before this and is accepted in diplomatic circles. That yes, once you have been in this. So all we are saying is that there's actually also a rule of people who qualify for these diplomatic circles that Foreign Affairs comes out with already. So the things we have put here is not something new. It's just a rehash of what exists, but we just wanted to highlight it over here. In terms of the incentives for equity, it's basically matching. If I give you a tax expenditures exemptions worth $10 million, then basically means I should be able to take, and the shares are valued, so I should be able to take $10 million worth of your business. The only thing that you can buy back at any time at the market price. So you decide after 1 year you want to buy it back, fine. Pay us what we put into it in terms of the exemptions, take your share. Government is not planning to be involved in management at all. The essence of the equity is not to take any interest, controlling interest or management interest, no. Ours will be more about silent shareholders, as sometimes we are there. We are shareholders. You pay us our dividend when it's due, or if you want to buy out, you buy out. So I think that's where we, so it's just a matching funds. So as for management, it's not part of the deal.
All right.
Yeah, but Abeku, please, maybe let me just come quickly to NOS conclusion. Sorry. Dan, I get your point on that call, but my issue is, let's say year one, you give tax expenditure of 10 million, and then you take equity in the business with value. Gradually year two, the company is still working, so they're still bringing items, they're still bringing goods. Government still continue to provide incentives and exemptions. So that as well also come to another 10 million. That will also be valued in terms of the company. So you realize that gradually, maybe by year 5, government maybe inadvertently is already taking 50% or 60% of the company. And by rules of accounting, you become the majority holder or the one managing the business or having majority stake. So that's why maybe probably we need to also look at the practicality of these expenditures as we continue to give, because it's not going to be a one-off. If the businesses are going to come in, year in, year out, these tax expenditures or tax exemptions will be granted to these entities. So we need to see such that it doesn't become like by year 1, year 2, year 3, already government has become the majority stakeholder, even though maybe we don't want to control it, and that's not the intention. So that's where maybe I want to interject to see whether we're also looking at that aspect.
So Kofi, those are very, very good.
So that's noted.
So I guess the point maybe Dan is making is they may have a lot more money in the company than you have, but they are not interested in control. So they see that money just for the purposes of earning dividends. And I get where Kofi is coming from. If that is what government intends to do, then that agreement that will back taking up equity should be stated very, very clearly. Yeah. So that we don't get to the point where government then becomes the majority shareholder and now says, I want to appoint a lot more people on the board than we currently have.
Yeah, correct.
Let me go to Kofi, because Kofi, I was going to come to you.
Sure.
And to get your opinion on this matter. I call 2021 the year of tax call or tax righteousness. And the reason I'm saying that is that various professional bodies have been making a call for their members to comply with tax laws. And one of the recent calls was done by the president at the Bar Conference recently, that people should comply with their income tax obligations, including filing of returns. But when you look at the exemptions bill, in particular, clause 9, it sort of suggests that when the government imports goods, and just for the sake of the audience and not for me to misquote, says goods imported by the president for the use of the president are exempt from custom duties, customs taxes, fees, and charges. This suggests that we are introducing some exemption here in an exemptions bill. And if we really want the citizens to comply, shouldn't we start with the head of state? Because I'm not too sure this provision here is provided for in the Constitution, for which if we do not include it here, it would have a problem. So in brief, the question to you, Kofi, is if we are having this clause inserted, is the clause not seeking to grant an exemption when it should rather be seeking to rationalize, or even, as we might have seen potentially for other sectors, removing the exemptions? What would be your comments on this, Kofi? Thank you very much.
Can I give some information first?
Okay, thank you.
Okay, let Kofi finish. Kofi finish.
Yeah, thanks. Abeko, I get your point, but I think this, as Daniel said in his presentation, this is not different, and as I also said earlier, from what Act 896 and even what Act 870, which the VAT law says. Because clearly the president in both acts, 896, 870, is exempted from certain taxes per his position as the president of the country, income taxes, when he brings in items and things from VAT and other things. So I'm sure, and that's my thought, the exemptions bill is only rehashing what is already existing and for which the transitional provisions in this exemptions bill itself is also protected. So that will be my view. If you ask me whether we should then also open the door for everybody else, including the president, to pay taxes, then of course that would be a different argument or a different discussions altogether, which then of course I can also contribute my portion. But in terms of the existing laws and what these things to do, I believe it's just a matter of only re-emphasizing what is already existing and for which the bill itself also seeks to protect by the transitional provisions.
Thank you very much, Kofi. Dan, you can come in.
Basically, Kofi has said the thing that this is not, as I said, it's a rehash of what exists already. What here is in the third schedule of the Customs Act. The reason we brought it here is that there's been some persons who claim that they belong to the office of the president or they are part of the presidency because of the report directed to the president. So bringing it here was to just clarify and make it clear that they don't qualify. That is the president who we are talking about over here. And that's what's in the law and that's what we are rehashing. So basically that's the general.
Okay, so
There's nothing new, something already exists.
So thank you very much, Dan. Just to bring to your attention, some hold the view that going into the future, this bill, when it becomes law, with this section 1, will seek to create a position whereby if we make certain amendments to the Customs Act in future to take away some of these benefits from the president, then what would then happen will be that you have a scenario where you cannot really touch it. So some are actually suggesting that yes, to deal with the abuses you talk about, it can just start from 9.2 instead of including 9.1, which will seek to say that whatever happens to those laws, and mind you, we have already reserved the Income Tax Act, the VAT Act, and portions of the Customs Act. And the school of thought is saying that if we already reserve those ones, then let the president get his benefit from that, whilst this 9.1 does not seek to expand the concessions, which may one day be changed, and for the president, it will still remain. So that is the point on that. Let me move quickly to.
Let me just go back. This already is what actually happening is that with this particular, all the things that are in the Customs Act, what we are doing is that once it comes here, we are repealing the specific clause in the Customs Act. So it means if we need to do any amendments, we'll do it here. Nothing stops us from changing this if we have to. The only thing is that we'll now do it in this bill, in this act, instead of the Customs Act. That's it, about the only difference.
All right, thank you very much, Dan. Maybe let me go to Mr. Quay. So Mr. Quay, we are currently hosting the AFCA Secretariat here in Ghana with a view to supporting and getting the dream of the Africa we all want. In your view, do you think that with the exemptions bill being considered at this time and it's ultimately being passed into law, do we really think that we'll be sending across a good signal that we really want to support companies in Ghana which would also look at getting a good share of the Africa market? What is your view on that, Isaac?
Thank you, Abiku. As earlier stated, what is important is the sound bite that we send to the investing public. The law in itself is not draconian per se. It's trying to harmonize scattered exemptions within various laws. And at times we all lose track of even where some of these exemptions are coming from. So it is the message, how the message is carried out. I don't think that if there's an investor who gets clarity, and my biggest problem, let me digress a little. We have the GIPC Act. We're supposed to get a regulation to it. I don't know whether it has been passed. My last check, it has not been passed. So the fear is that much as we have quite a general legislation under the Exemptions Act, the regulations that is going to give flesh to it, give some clarity. If it's going to take a year, 2 years, 3 years, then Abiku, your fear can be said to be very real. But if they are able to come out with the regulations, such as some of the areas that need some clarity, so that the investing public will be able to identify where they fall within the exemption bill. You have the GIPC also, as stated in the Act, publishing the priority areas as indicated. We will not have to fear any threat from investors. The biggest problem is our inability to walk the talk. That is getting good legislations, follow-ups with allies, we are unable to do it, and those who actually administer the laws. the tone from the revenue should not be seen as if they are trying to hunt somebody down, but you want to correct a problem. And for me, looking at the memorandum alone, it does not really point out that the intention of the ministry is to endanger investment, but rather it is when we are all aware of what there is and we know where to find, then I think that clarity is rather inuring to the benefit or the advantage of the investing public. But where you have to look for 100 different legislation to know whether or not some exemptions avail to you, that is more problematic. But I want to believe that with a single document, if we're all certain that if you can't find it in the tax legislation and go to the Exemptions Act with direction to GIPC, you should be very clear, and free zones, you should be very clear as to what will near to you. And also the confusion by various governmental agencies, MMDAs, among others, that they can, tell people we have incentives for you. I mean, those things will, if properly managed, come to an end. Because the problem we are having is there's confusion in the minds of the investing public as to what they can apply for. And so Article 174 of the Constitution will be preserved. The fidelity of it will be purely protected, such that we are not going to have situations where people can talk about being exempted, flag it. At the end of the day, they've not gone through the actual process. They leave the shores, and others who may have transacted businesses with them, when tax audited, are unable to provide documentary evidence supporting the deemed exemptions, and they are also made to pay. So whilst we are looking at the issues, let us look at it not from just one angle about the one who's supposedly enjoying exemptions, but we also look at those who have found themselves in the tax net, the wrong way of the tax net, because they under the mistaken belief that whoever provided some services or produced some goods is exempted. And because of that, they did not perform their job of withholding agents and were made to pay for it. So clarity in the legislation for me is quite comforting.
All right. So thank you very much, Isaac. And emphasizing that for you, as long as we have a single reference document to determine whether I am exempted or not, is quite comforting. Now, Dan, there's a question for you here. And someone is asking that in 2020, the exemption, or specifically the import exemptions, reduced to 1.71 billion cedis. So the one who is asking wants to know, what is it that we really did to be able to drop it, for example, from 2017 of 3 billion thereabouts to about half of it of 1.71. Done.
Okay, as I enumerated earlier in my presentation, several things have been done. We are reviewing more of the contracts and making sure that there are no, should I say, illegal exemptions in them. And we always, it's something that is an interesting fight between us and our colleague ministries. They go out and put all manner of things which previously would have gone to Parliament, which we are making sure is not done. We reduce the special permits. Special permits normally will be given while we are waiting to go to Parliament. We are saying that bring the things we process it for Parliament, so that we are sure that what's in the contract is known. So basically, these are some of the things. The third-party transactions have been reduced, where people transfer exemptions to other people have come down. And so everybody, GIPC has tightened what they do. And so there are quite a number of things that have been done to get this done. But you see, what you want to do is that you want to just put the clarity on paper for everybody to know. You want to make sure that the law is clear on what you are doing. those powers are there, but you just want to make sure that all these, so that's the idea of the bill. And then, as I mentioned, the monitoring, evaluation, and those things were not too clear. The local content aspect, which we've sort of been applying on and off, was not really also clear. So some of these things have been put in black and white so that everybody just understands it. As I say, the commercial contracts too, we've stopped them. We've had the unpleasant duty just recently of writing to some MDAs and telling them that they have to go and look for money and pay duties that they've decided that should be exempt when they shouldn't be exempt. So those are some of the things that have been done. But I want to put it in black and white.
Okay. So thank you very much, Dan. And there's a follow-up question to that, which I will throw to Kofi.
Abeku, just before,
yes, Isaac,
if I could interject. Dan, beyond the legislation, for many of us, it's the red tapeism of the public service, which is more of a problem. That is to say, what would be the turnaround time if somebody meets all the conditions? Because no matter how good the legislation is, if in implementations, people find a lot of red tapeism, it's more than likely to destroy whatever good intentions that you may have in legislation. And for me, when you read the legislation, you can see that the power of the minister has been excessively increased to the extent that all other ministries, all other ministers will have to ensure they comply through the minister. It then means that, one, if applications are made and they rightfully have to be rejected, they ought to be rejected rightfully within the shortest possible time. If one has actually met the conditions and has to be approved, it must be done timeously. For me, that is the bigger problem. Thank you.
All right, so thank you very much. Thank you very much, Isaac. And the question I was going to go to Kofi with, of course, one of our attendees wants to clarify that, does this tax exemption touch on the issue of civil engineering public works? And if it does that scope also apply as provided by the VAT Act? And can a subcontractually claim to be part of this scope? Did you get a question, or let me read it out again? Kofi.
Okay, go ahead. I mean, can go over.
Yeah. Yes, so the person is asking that, does the Tax Exemption Bill cover civil engineering public works? And as far as its scope is concerned, does the scope apply as provided in the VAT Act? So is a subcontractor part of this scope? So that's the question the person is asking. I think Dan addressed it, but it's good if you can address it again so that the one action, the question can be clear. Thanks.
I think, I mean, from the bill, from all the sessions that we have gone through, and for the presentation by Mr. Noe, it does apply. However, one thing is clear, that the clauses and the sections in Act 870 and 896 are saved. So we should also be mindful. So whatever exemptions that are applicable in 896, which is the income tax law, and those that are also spelled out in 870, which is the VAT law, are still relevant. They are not going to change. So what it means that whatever that is relevant for civil engineering that are stated in those two acts will still be relevant and will still work as they are now. What this bill also seeks to know is that, as he said, if it's a commercial project, so if the civil engineering work is going to be a commercial project, aside whatever relevant laws that are already existing in 870 and 896, if you further require any exemption beyond what has been spelled out there, then my understanding from this bill is that you need to now comply with the terms of the bill as we are now discussing. So that, in my maybe a short clarification, what I would say, you cannot have, if it's not there, it is not there. But if it is well stated in both acts, then of course, yes, it will apply. If it is not, and you need further exemptions as spelled out in this bill, then you need to go and comply with whatever terms and agreements that the bill seeks to protect. Because like you said, even for commercial projects, you'll be made to pay your taxes, because government will also be paying for, or whoever is going to enjoy the service will also be paying for it. So Abeku, that would be my response to the person who seeks clarification on that point.
All right. So thank you very much for the clarification, Kofi. It helps, and I'll be winding down very soon. Another comment has come through again, but Mr. Neo, you need not respond to this. So the comment says, not sure how government will be a passive shareholder in any company that over time the capitalized exemption gives it a controlling interest. Would government still remain passive? Is Mr. Neo saying that equity by way of exemption gives government a controlling interest? This can actually result in nationalization of private businesses over time, and that's a risk to FDIs. So, I mean, I think this question is still coming up. It's good we know. I think the whole idea of this public dialogue is to highlight certain portions. And as Mr. Nguyen said, the only stage that has been completed is a submission to the economic management team. The next would be to cabinet. Maybe you know somebody on cabinet, starts making some inputs to that person. And if you miss that one too, of course, it's going to go to those who voted for in parliament. And you could always seek parliamentary intervention for those if there are still consents. But Mr. Nguyen, let me come to you for this before I wrap up with concluding comments. What would be the model for reporting on exemptions by beneficiaries, as alluded by Mr. Nguyen, since this proposition would be a panacea for effective monitoring of exemption? Also, is government going to have a team with the requisite skills to deal with all these issues? So, Mr. Nguyen, that's a question for you. And I think that's the last question I will be reading out.
Okay. So, basically, we've provided in the Act what the reporting requirements are, what each person do when you're applying for an exemption, what you're supposed to do. It's quite a lot. I don't think I can rehash all of them, but you must evaluate, you must indicate, you must do the tax assessment in terms of the customs duties. That one must be done. What quantum, what amount, what quantum of the exemption you use in a particular instance would have given a cap in terms of either time or amount, how much of it is left. So all these are things that will be done. When it comes to the capacity, as for the capacity, we have the capacity. Creating, as Isaac said, is creating the time to do this and making sure that on time. And let's know that some of this monitoring is going to be done by GRA. They are responsible for doing this, and the law basically is being banned by the ministry, but the GRA is one of the major people, and they have the manpower and capacity to do that. And so I believe that we'll be able to get it done in a way that will benefit everybody. The transparency will be there, the efficiency will be there. And for our information, since around 2018, what we've done is that we've automated some aspect of the approval process. And so quite a number of approvals are being done online, and it's making things faster. If there's a query is raised online, answer your query, you get it. A few people decide that they don't like the queries, and so they decide to call all around and get people to intervene in situations they shouldn't intervene in. And so it's explained to them, and things go on. Sometimes there are delays, that one I agree. I don't think that I'll say that there are none. There are some delays. We do our best to sort of clear all these things up and make the system good for all of us, so that we can follow up on compliance on those people who are not complying with the law and are not paying, leaving the tax payments to the about 2,000 or 3,000 of us, 2 or 3 million of us who are paying. And rest the 12 million who are going free, so that we can have some time to dwell on them and get them also to pay something. Thank you.
All right. So thank you very much, Dan. And one of the attendees is insisting to ask a question by voice. So please.
I'm also here, please.
Okay, Tio, don't worry. I'll give you an opportunity. So Frederick Bessa, could you ask your question? And please do it under a minute so that we can bring the curtains down. Hello, Frederick.
Okay, thank you very much. I'm here. Thank you very much, Abeku. My concern is with the monitoring and evaluation. In fact, Ghana, we draft very good and beautiful legislation. But then you realize that the monitoring and evaluation is very poor. Considering a company who is working in Boku, who has been granted a tax exemption for about 5 years, the company is on a contract. And within that 5 years, the company can have subcontract somewhere, and they will use the same exemption document to be procuring items for other contracts. Who monitors this? Is it GRA or Ministry of Finance? So the responsibility for the monitoring, in fact, the laxity most of the times is on GRA, because they don't really monitor what goes on in the company. For instance, there can be a change in the funding arrangement. There are times that the government funds and the funds also come from outside. When the funding changes, obviously there should be a change in the exemption document. Who monitors this? What happens? Sometimes they just allow it like that, and then the exemption flows, and what happens? So I want to know who monitors. Is it GRA or Ministry of Finance?
All right, so Dan, I know you've addressed it, but please just in 20 seconds address the question. Thanks.
Yes, so monitoring will be done by both the Ministry of Finance and the Ghana Revenue Authority. All
right, thank you very much, Dan. Mr. Chairman, I would give you just a minute to ask your question.
No, I really beg you. Give me like 3 questions, please.
Okay, please go ahead. And we cannot go beyond 4:30. Thank you. And I'm sure the chamber is noting down all the points so that we can submit the paper as the chairman said from the beginning. So Chairman, please go ahead and ask you.
Okay. So Mr. Noy, thank you very much for the insightful presentation. My question relates to what is the guiding principle for the issuance of exemptions? What's the guiding principle? Do you have a guiding principle for issuance of those exemptions? My second question relates to when you have granted exemptions, normally you grant the exemption to the foreigner. So the contract is between the foreign entity and government of Ghana or an agency of government of Ghana. But you will notice that either a PE or a CDR is set up for the purpose of carrying out the project. So my second question relates to, is the exemption, or can the exemption be used once the foreign entity has set up a domestic, legal entity, i.e. an external company or can they use it? Because if you look at your own policy, it tells you the foreign entity shall have an obligation in terms of taxes. However, there's some concern that, well, once it's set up, it's not assignable. I think we need clarity on that. And my third question borders on what is the policy rationale? Why are you seeking to review the exemptions within 5 years, when some projects may run into 3 years or 4 years? So what is the policy rationale for electing to have the policy, the exemption review at 5 years? Why not 7 years? What is going into the calculation? Thank you.
All right, so thank you very much, Chairman. Dan, let me just quickly summarize so that you can address it in a minute.
Oh, so I think I'm okay.
Yeah, okay, all right, go ahead, please.
So I will save time. Policy rationale for the sunset clauses. If you notice, what we said is that if it's not reviewed or renewed before the 5 years, then it kicks in. So if there's a sunset clause on it already, the project is for 3 years. At the end of 3 years, that's the end of the project. That's the end of the exemption. It ends it. If it's for 7 years, it means there's a clause for 7 years. So then it will run to the 7. If we do the 5-year review and we look at it, and the 7 years is something that is obsolete, we can stop it. But then the idea is to have that and work around that. The guiding principle for the issuance of exemptions, basically, as we said, the bill is supposed to clarify why we want to do the tax expenditure, why we want that expenditure, what we expect to get from the expenditure, is to bring clarity on all this. We can all monitor. So that it won't be just there, so that I can have at least my friends like you and Abeku reminding me that, Dan, This thing was supposed to have done this thing. Has it been done or hasn't it been done? Why have you not stopped, or why are you continuing? That's it. So that we can all be monitors of this. The issue of the PE that says that most of the times the contracts actually require that you establish a PE here. And there's an old agreement I chanced on, and I laughed because those who signed that contract didn't understand it. The person had actually been put it in it that the contract does not create a PE. So the person knew very well that you needed to create for those of us, or most of us are technical, so we understand the permanent establishment issue. So, and most of these things are not with foreign entities. There are a lot of local entities who are registered with GIPC and are enjoying exemptions and other incentives. So yes, the foreign entities will establish the PE. The terms will require that. So most of them have to file returns, which they do. And the issues that relate to it apply to them. There's a question here which I think I can answer and say that do SMEs also qualify for tax exemptions? Yes, once you fall within the range, the exemption range, you qualify for the tax exemption. So once you meet the criteria, that's all that's needed. Thank you.
All right. So thank you very much, Dan. My other panel members, I'm going to call you for your concluding remarks. Let me start with Isaac. Isaac, please do this in 30 seconds for me. I'll be glad if you can add whether, as a result of this conversation, government should proceed confidently, proceed with caution, or not proceed. Thank you very much.
I think government should proceed. However, I want to avert our attention to clause 26, sub clause 3 and 4. There's an irreconcilable position. That is to say, the commissioner shall submit to the minister an annual report, and the minister shall, as part of the presentation of the budget to Parliament, submit an annual report to Parliament. The question is, at what point should the annual report be submitted? Because if it is an annual report and we're having our budgets in November, would you be able to have the annual report? What prevents the Commissioner General submitting quarterly and bi-yearly reports to the minister? And for me, that is one area I think they should look at. Beyond that, in terms of drafting, not much of a problem. But what is important is the human resources. Thank you.
Thank you very much. Thank you very much, Isaac. Let me go to Kofi. Kofi, your final remarks, and if you can, you may want to add whether government should proceed with caution, or should not proceed on this exemptions bill. Thanks.
Thank you. I think government should proceed, given the discussions and things that we have, as i.e. in consolidating all the other bills and things that are. But in my own view, as I said at the beginning of the discussion, I believe that government should tread cautiously once again in terms of how do we give exemptions, especially to people coming into the country to invest at the detriment of our local entrepreneurs. Because as you know, most of these exemptions, a lot of people who are local companies and things usually do not apply or do not benefit from some of these things. It's because we are saying that we are looking for FDIs. But if you also look at the corporate institutions and the population and the ratio, you realize that a lot of local entrepreneurs are also already involved in developing the economy. So that's where I also think that government should focus. In as much as we are trying to attract people by these exemption rules, we should also focus on our own local entrepreneurs who are setting up big businesses to also be able to have room and capital to manage their business and push the economy forward. Thank you.
Thank you very much, Kofi. Dan, let me come to you also for just a minute for your concluding remarks. For you, I know you don't have a choice but to proceed. So I'm not going to ask whether you proceed with caution or not to proceed. So please give us your final comments. You are championing this. I'm not too sure why you changed your mind at this stage. Thanks.
Okay, right. And mine is to say thank you to everybody for the contributions and the remarks and the comments. I believe that this will help us to refine the bill so that it meets all of our expectations. And basically, that is what we want to do. And then Kofi raised an issue which I think is important. And it's something my minister has been harping on over the past year and even for quite a long while. And it's why we are looking at a wiser nation, as we've always said. That we believe that local industry is what holds the key to the things that we do. So there are quite a number of incentives being put, and as part of the CARES project program, there are a few more things that are being done to bring the private sector up so that we can sort of move this country forward based on our local metal and not just that of the foreigners. So that's why I want to thank you.
Thank you very much, Dan. And just before I go to the chairman for today's occasion, Dan, I know the chamber will send this to you, but it's important to consider the following. 1, the position on free zones. 2, the issue on controlling interests. 3, the important matters as regard implementation of this, because we've had various laws. If they were working as they should work, probably we don't even need this exemptions bill. 4, timelines for ensuring that there is prompt response when the other ministers contact your boss on exemption matters. And then 5, the issue around the tax laws and its simplicity. So I hope you take down this point as you go back to make the bill better. So Chairman, please, would you give us the closing remarks and then close today's session? And before Chairman does that, please accept our apology for running over time. Thank you.
All right. Thank you, Abeku, and thank you all our panelists. It's been an insightful discussion. I was originally not for the bill because I had not understood the policy rationale, why it was being mooted for. But Mr. Noah has taken his time to give us why they're trying to align all the policies. It is clear that there will be existing statutory exemptions, and also there are other exemptions that might be clearly set out in the Exemption Act if it becomes a law. So it's a very good one. We hope that at the end of the day, it will bring clarity to the business community. In our effort to streamline the exemptions, we must also be mindful that it is not just about that aspect. We have to make sure that our tax laws are simplified so that the taxpayers may also be able to understand and appreciate the issue so they can have voluntary compliance. The second point that I also want to highlight is that, yes, in looking at these exemptions, we have to also consider the small taxpayers, the business community who have certain threshold. Maybe we have to think about having some a small corporate income tax regime for small business community, because we are not equal before tax purposes in terms of neutrality. So we have to have regards to that. Overall, it's a very good one. We hope that in a nick of time, it will be laid before Parliament and it will become an existing law. And we hope that some few years down the line, we can monitor whether it was worth it or not. Thank you very much.
All right, so Siflos, thank you very much. I can see some questions. How do we contact Mr. Nier? I want to remind us that the UK Chamber is there for networking, advocacy, trade support services, and they are on every conceivable social media platform. So Facebook, Instagram, Twitter, LinkedIn. So if you wish to contact Mr. Nier, please, you can use all those platforms to contact him. So thank you very much, and do enjoy your evening. And we look forward to having the 4th tax dialogue. Bye-bye.